Welcome back. In this video, we are going to look at the concept of trend channels. When we started the discussion on trend lines, we said that in an uptrend, trend lines are formed by joining the lows of minor fluctuations that are against the trend. So the bottoms formed by minor counter-trend moves in an uptrend are connected to form an uptrend line. We also said that the tops formed in an uptrend may or may not lie on a straight line. However, often it may happen that the tops may lie on a straight line as well, and this straight line may be parallel to the original trend line. We call the original trend line that connects the bottoms in an uptrend as the basic trend line, and the parallel line that is formed by connecting the tops in an uptrend is called the return line. The entire area between the basic trend line and the return line is called a trend channel. Trend channels are commonly found in actively traded liquid stocks. They don't appear very often in less liquid stocks because these stocks often do not get a lot of attention from investors. Now you may naturally ask, what is the value of identifying a trend channel? As a beginner, you might think trend channels are a good way to identify a profit-taking level. You may also look at the return line. You may look at the return line and think that it may be a good area to book your profits. However, experienced traders use trend channels in a more negative sense. The idea is that if a rally is not able to reach the return line, then it is a sign of deteriorating strength of the uptrend. So if you see that a rally failed to reach the return line after rallying from the baseline, you may assume it is highly likely that the prices will be able to break below the baseline if the prices were to test it again. Let's look at an example to understand this. Here is a chart of India's leading stock index, the Nifty. Here we see that this up move is bound by two trend lines, that is the baseline and the return line. Hence these lines form a trend channel. Now here you see that the prices were not able to touch the return line after bouncing from the baseline in an up move. On seeing this, you should be alert that the next time the prices touch the baseline, it is very likely that the prices will break below it as the rally might be losing momentum. This loss in momentum is the reason prices are unable to reach the return line. Once the prices come back to test the return line, we see here that they break below it, leading to a substantial fall. With this, we have covered the topic on trend channels. In the next video, we will look at another important tool for analysis, which is the technical indicators. So see you in the next video.